tough numbers, tough information to digest, and no doubt, Francis, this evening's number or chart is not going to be an exception, is it?
No, so we're going to look at the Rand down 3%, and this is what it's all about. The chart of the day following the worst economic news possible. It was confirmed today that South Africa has slipped into a recession in the second quarter of the year. And a recession occurs when you'll see it here. You have an economy that's contracting for 2 quarters in a row. So we contracted in the first and second quarter. The implications are huge. When the economy is contracting, it means that less money is coming in for goods and services than previously. That means companies are making less profits. They are less likely to employ people. So unemployment could go up. It's already soaring. You'll see that the economy contracted in the first quarter, and the initial figure, by the way, given to us a while ago was 2.2%, but that has been revised and the picture is even worse. We now know that the economy contracted by 2.6% in the first quarter of the year. Today's data also shows it contracted by 0.7% in the second quarter. And you will see, looking back over previous years, that there have been quarters of contraction, but the last time we saw 2 or more, a recession, was in 2009 during the global financial crisis. Now, this recession, the latest one that we're seeing here in 2018, raises many questions about South Africa's economic path, because we are contracting when many parts of the world are growing. Bongani?
Yes, indeed, Francis. There remains a big question mark around the agricultural sector. That, of course, has declined by 29% in the second quarter after a 37% decline in the first quarter. Today's GDP data is worse than was expected. Many economists were hoping we had maybe just escaped the recession. The Rand tanked on the news today. It's weakened by nearly 3% against the dollar.
The local economy is in more trouble than earlier thought. The negativity is driven by the agriculture sector, which is in recession. The sector contracted by over 29% in the second quarter after it went down by almost 4% in the first quarter. The decline is blamed on the drop in the production of field crops, fruits, vegetables and nuts. The manufacturing industry also contracted, mainly due to a decrease in the production of motor vehicles, parts and accessories. Some positivity came from modest growth in the mining industry and finance, as well as real estate and business services.
Summer rainfall came later than they usually do, so we didn't get the production that we're supposed to get in the second quarter, which means it's likely to come through into third quarter. But I think the important thing is we are in a technical recession, and this is not the making of the past 6 months, it's the making of the past 10 years. The mismanagement of the economy is what brought us it at this point in time. But going forward, it means that for this year we are going to have lower economic growth than what was projected.
The low growth will have negative implications for the budget deficit and for the country's sovereign credit ratings.
Moody's indicated in a statement not too long ago that they are concerned whether government will be able to meet its deficit targets over the next couple of years. They said that it would be difficult and that government will probably not be able to reduce the budget deficit at quite the rate they envisioned back in February, but that they felt it was still within reach. I think what it means is that you're going to have to have very tight budget controls. And that the pace at which they initially set out for themselves to reduce the budget deficit might look a little bit different. But they have to continue to move in the right direction. I think that is the key. If they fail to do so, we will definitely be downgraded.
The odds are against South Africa, with the global economy expected to slow down on the back of global trade wars. Others suggest more urgent steps should be taken to boost economic growth.
We need an emergency cut in interest rates of 200 basis points just to re-stimulate the economy and create more confidence in the economy. And that is what can work very quickly in getting our economy working again. But it has to be supported with a fiscal stimulus. And unfortunately, what the ANC and the Treasury has put on the table is not a fiscal stimulus. They're talking about reprioritizing existing spending. A fiscal stimulus is new money into the economy.
The rand weakened further against the dollar after Stats SA announced the figures. It was trading well over 15 rand against the dollar in late afternoon trade. Gloria Safako Musi, SABC News, Johannesburg.
To discuss, I'm joined by economist Thabi Leoka. Thank you for being with us, Thabi. So, were you, like everybody else, thinking that this could be avoided and then, sure?
So I thought that would see a slight improvement, so about 0.3%. So a contraction was unexpected by myself and most economists.
Why don't we see this sort of thing coming?
Yeah, you know what, I thought that you'd see a rebound in some of the sectors. I knew that the manufacturing sector would not post positive numbers, but I thought we'd see a stronger numbers from finance, from also mining, and also I didn't expect such a weak agriculture sector number coming from the agriculture sector. I mean, at 29, that's like 30%
it's
contraction.
Huge. And it was above 30 the first quarter, 29%. Yeah. What does that say to you? What's going on in agriculture?
It's really that to the tail end of the drought. So a few things happened. There was a slow increase in horticulture production. There was also the effect of the drought, especially in the Western Cape, and also the hailstorm in Mpumalanga affected some plantation there. So that all those three factors impacted on the agriculture sector. And I must add that I've seen a few comments on whether this has to do with the land policy.
That's exactly what I was going to
ask. It has absolutely nothing to do with the land policy. I actually think that even in a year or 2 years' time, you know, farmers don't think, oh, I'm not going to plant, or I'm not going to produce because of the land policy.
Yeah.
They are unrelated currently.
I agree, and even the Banking Association looked at some figures showing that there was greater lending to commercial farmers this year compared to December. So that lending keeps on going on.
And it's a good thing because it tells you that either people are more interested in going into farming and food production, maybe more farmers are buying more property. So it's an indication of a sector that is growing. It just we need to see the numbers reflected in the GDP.
Okay, so then what is going on here? Because if we look at the last time we were in recession, the whole world was basically in recession. Now we're seeing parts of the world doing really well. We are so out of step even with sub-Saharan Africa. What are we doing wrong?
Remember that even last year, just before the revision of the GDP numbers, the last quarter of 2016 and the first quarter of 2017 had contracted until we revised. I don't think any revision would increase the current number to turn it into a positive.
Yeah.
So obviously we've been bubbling along at the bottom for a long time. So it's not like we've been
hanging on, basically. Yeah.
We've been hanging on, and I think that we've been speaking about policies and creating policies and not implementing. And this is the result of an economy that hasn't implemented some of the policies that would trigger growth. The unemployment rate is very high, and in your introduction you mentioned how businesses are unlikely to employ given the state of the economy, and unfortunately that may be the case. But something that could turn it around is have business invest in South Africa, because South Africa is underperforming, not the other way around. And I think that we need to have discussions between government, healthy discussions between government and the business sector to find a way of working towards turning the economy around.
Well, you say we're not implementing policies. What do we need to implement? What's number one?
So I think, for instance, we start from scratch. Education. The education, we need to look at the type of education we have. We need to look at the type of graduates that we produce. Are they the graduates that would feed into the economy that we have now, or also more importantly, the economy that we want to see in future? The other thing is that, labor rigidities. I think that we need to have more flexible labor hours so that more companies can employ more people in different times and using different slots, for instance. The other thing is that we need to have at least policy that's certain, and that's an easy one. We just need to ensure that we communicate, at least the government communicates its policies very clearly, so that business can plan according to those policies.
Well, is this where land comes in? So the Banking Association saying, and I agree, we still don't know which land will be expropriated. So it seems like politically there is going to be expropriation without compensation, but the how, the when, are we letting those questions just hang out there for way too long again?
I think we are. So I don't particularly have a problem with expropriation without compensation, only because it's actually in the Constitution. But you're right in that when there's uncertainty about how and when, you start this build-up of anxiety, and you also see it on social media. It then evolves into this racial tension and fear-mongering, which is unnecessary. And you have now investors listening to South Africans talk badly about this policy that hasn't even been implemented, or even we don't even have the details of it, and yet this fear-mongering is actually making many investors a little bit more apprehensive. They're holding back rather than actually investing in South Africa, because they are also uncertain about what this policy means. And also South Africans are being very negative about something that they don't know. We don't know how it'll turn out, to what extent they will amend the Constitution. But until such time, I think that we should just wait and see, but this waiting and see is creating this tension and anxiety is building up.
Looking at social media, a lot of people are asking, do you blame the president now? People were blaming the former president. The woes continue. Is this a current administration problem or a previous administration problem that created a hole that we're trying to get out of?
I think that this deterioration has been happening for a few years, and I wouldn't blame any administration. Yes, the previous administration was bad in many ways, but it is still the same political party. And many of the ministers are still there. So I think that we should start implementing some of the things that have been put there. So the ANC government, if you're talking about which administration, it was the previous administration that came up with the growth plan, the NDP. And so the failure of implementing it has led to where we are now. So it is a good policy if we implement it, at least as part of it is good if we implemented it. And but the failure of implementation means that we don't have answers to some of the problems.
And it spoke about a lot of the things that you mentioned: education, put technocrats in charge to make sure that we upskill South Africa. What does recession mean for you and me, for the man on the street, for a person who catches taxis every day? What does it mean for the ordinary South African?
So I'll start with the expenditure side, which we also haven't spoken about, and I'll explain what it means for the ordinary South Africans. So on the expenditure side, we have a contraction in household consumption. That means that consumers are obviously not buying. Yeah. They're not buying big ticket items like TVs and fridges. They're not spending. You've mentioned businesses are not spending. We also have a contraction in investments. So government investment is slowing down. So is private investment. You have a contraction in imports. Basically, this shows demand, which speaks to the two previous ones: household consumption and investment. So there is a slower demand in goods than previously, and this is imported goods. Basically, this means also higher unemployment, given that business is not investing. Business is obviously a bit more apprehensive than previous years. It means that there is also, if we're seeing also increases in the rand as a result of these bad numbers coming out of South Africa. Never mind that there's also emerging markets that are underperforming, and investors are reacting to an emerging market which South Africa is a part of. This could lead to a weaker rand, which means higher petrol prices, higher inflation, all sorts of issues. And for the average consumers,
so raising the cost of living
is increasing,
making it harder to get a job.
Harder to get a job. If there are a few imported goods, they're going to be more expensive because of the higher, because of the weaker rand. So all sorts of problems.
And Does this mean we could have a downgrade that was raised, and that makes all these issues even worse?
Yeah, I don't think so. A GDP, or a contraction or a technical recession wouldn't result necessarily in a downgrade alone. It would have to see what our fiscal health is, the debt profile, which is debt to GDP numbers. Would have to see whether the budget deficit has widened or narrowed. Would have to see also political uncertainty, whether rating agencies feel that this has worsened or not. Monetary policy seems to be doing quite well. So it's all these factors that would determine whether we would get downgraded or not. Okay,
finally, you've used the term technical recession. Just explain to us, why do we even need to say technical? Why is that term bandied about? Are we in a recession or not?
So technical is usually used for when there's 2 consecutive quarters, or even 3. But actually, let's just say mainly 2, only because when there's 3, chances are the full year is in recession, and that is what a recession is. When your entire 2008 has contracted, and that would be a recession, whereas a technical recession is just 2 consecutive quarters of negative growth.
Okay, thank you for clarifying that. And now I have to throw in one more, because we're hearing news that South Africa has been excluded from the concession around tariffs from the US. Of course, we've been fighting to stay in AGOA to get that preferential access to US markets. I don't have all the details, but does that sound serious to you, adding to the woes of today?
That sounds very serious. I didn't know about this, but here's an example. AGOA has meant that we have a trade surplus with the US, and this is a big economy, the biggest economy in the world. And so then when we don't have preferential trade treatments, that would mean that all that could fall, could deteriorate. We could also have, a big chunk of our export also goes to, especially vehicles, goes to the US because of AGOA. And if that is then turned back or that's rescinded, that means that we're not getting preferential treatment there. Countries like in Latin America or Mexico will then take over from where we used to, the role that we used to play for in the US in terms of exports.
And those car makers have been coming here, creating jobs. Sure. All right. Thank you very much, economist Thabi Leoka. And we're just getting that news out of the United States. We'll bring you more details as they become available. Bongani?
Thank you.